Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Thursday, April 26, 2007. The market has closed, and short sellers once again had a tough day. The Nasdaq 100 closed with a 12-cent gain, or about 0.2%. I think probably a lot of people were surprised that the market wasn't up bigger because of the Apple earnings, but you know, the market is kind of extended in here. It's been up a lot of days in a row, and the candle people are going to call this some kind of spinning top or something bearish like that. But as long as we continue to focus on the shorter term action, we can see that the trend remains firmly higher. Now, the buyers were able to keep pushing higher throughout the day until the end of the day. We got a little bit of a pullback, but still a very healthy uptrend, still very tough to on anyone who's trying to pick a top. You had about 30 minutes where you could have made money short today. As far as trying to pick a top. Obviously, day traders are going to be able to scalp in and out, but that's a different story than trading with the trend here. And clearly, the trend remains higher. We get this rising 5-day moving average, so we always want to give the benefit of the doubt on the short-term trend, although it is getting pretty extended from there. So I think it's just a matter of any day before we get a pullback, but the market doesn't really care what I think. The market's going to do what it does, but obviously, the risk management is the most important thing that you can think about right now, and make sure that you're holding on to your gains and not taking excessive risks by getting long up here now. Now is not the time to be a fresh buyer, except for some isolated circumstances where stocks are just starting their momentum. But overall, things are a little bit extended here. I think our our support levels, we could say down towards this level, towards 45.80. That's about where we have the 5-day moving average, and the highs from, I guess this was Tuesday. Below that, of course, we've got 45.60, which is probably the more important level. But we are extended, and tomorrow's Friday before the weekend. Maybe we get a little bit of a pause in the dramatic buying that we've seen lately. But the point is, don't try to pick the top. No one has been able to do it properly yet because we're at multiple year highs in these S&Ps, and they just continue to chug higher and run over anyone that gets in the way on the short side. This 5-day moving average is rallying still, and we've got it right around that 148.70 level, which is also the highs from, I guess, the 20th. And that probably looks to be the best level of support. We are extended from there, so again, I wouldn't be surprised to see a little bit of a pullback in here, but there's nothing that suggests that yet, because we saw new highs just as early or as late as about an hour ago from when the market closed. So just continue to play strong defense, and that's how you're not going to get hurt, which is, I think, the object right now, is not taking on excessive risk and exposing yourself to too much downside when we get this extended. The SMH, the semis, obviously they broke out. They didn't really give people an opportunity to get back in, except for that one day of selling in there. Today they paused, did an inside day, meaning today's high and low. Well, today's high was less than Wednesday's high, and today's low was higher than Wednesday's high. So today's range occurred entirely within the range of the previous day's activity. Which a lot of times comes near a turning point. It just means the market might be getting a little bit tired in here, and we're seeing a little bit of distribution. Doesn't mean that this market is going to reverse itself, because we've got a multi-year breakout past that 36 level, and we've got a very powerful rally underway. Looking at the half-hour time frame, you can see that this market wasn't quite as strong. In fact, it sold off quickly in the morning, but did start to chug back throughout the day. So I think that 37 is probably going to be our best short-term level of support for this market, and then down towards this gap area. And you know what? Don't be one of those people that is looking to buy the semiconductors when the gap gets filled. Not all gaps get filled. That, throw that part of the technical analysis book away, because sometimes the gaps do get filled, but it's not till 2 or 3 years later when they're coming down on the other side after they've already experienced a 100% gain or something dramatic like that. But all gaps do not have to be filled. That is absolutely not true. IWM, the Russell 2000, we did see a new closing high in here today. So this market hasn't been making the closing highs, but it is at the all-time highs, unlike the Nasdaq and the S&P 500. So market continues to act very strong. Best level of support is down near that 81 level that we're looking at as the resistance, and now is the best support. We've got some short-term support in at about 82 and a quarter or so, I'd say, too. This market sold off quickly, but then really closed the strongest of these markets. So the mid caps or the Russell 2000 continue to be the place where money's being treated best right now. EXEL, we got involved in this one about 3 days ago, I believe, at 11.05 was it, and we got stopped out today with a gain of 26 cents. That move failed, so it was a good place to set our stop because we didn't give back the entire gain. Autodesk, ADSK, we got involved in yesterday at $40.60 early on. We had raised our stop to break even. The target was $42 a share. It made that on the gap open. When your target is obtained after the market gets stretched like this and the market gaps up $1, you always want to at least take partial profits. I would say you should be out of this stock. That's the way I trade it. It makes sense, especially after that gap came down so hard. If you are still in it, I would say stop somewhere down near today's lows. So I'm going to say that we're out of that one with a very nice gain, though, in at 40.60 and out at let's say $42 a share. Genelabs, GNLB, this one had a really terrible open, and unfortunately it took us out with an 8-cent loss. So this little guy never got going for whatever reason. It still looks good to me, but it's really you got a lot of these sharp sell-offs. I don't know what that's all about, but overall it's still in a good trend. Just it's a little too choppy for my liking. We got short SIGM yesterday at I believe $27 a share. We lowered our stop to $26.55, and that turned out to be a good place to cover our short today for a 45-cent gain.